So this is the second portfolio that I will be managing. As you can see, the portfolio right now is sitting around roughly 41,000. I don't think it'll be interesting to bring it to 50K, but I want to make a goal of 100K. So if any of you saw my previous video in terms of the 50K challenge, I have successfully bring that portfolio north of 50K. I believe right now it's sitting around 115,000 dollars or $120,000. If any of you like, I will provide an update basically in the nearby future. So that account, as you know, it consists mainly of Neo, and Neo has done incredibly well this year. So I'll show you the weekly chart and then I'll show you the monthly chart right here. It's this portfolio overall, it's not up a lot. And right here, it's 23%. This is not that accurate if you look at especially this one, it's not that accurate if you look at the overall portfolio, which I'll be showing you at the end of this challenge when I bring it to 100K. Hopefully we'll see. I don't know how long it's going to take, but overall, this portfolio has been doing pretty well. I took over the managing of this portfolio back in when we had that March, was it March or June when we had that drop in the market. It was pretty substantial, but the impact of this portfolio, it wasn't that much of an impact because when I took over, it wasn't around this $41,000. It was much less than that, but I guess I got lucky to buy in at the time, and a lot of trades that I have done, mostly swing trading, have really been benefiting this portfolio. So as you know, I'm a long-term investor and I do swing trading here and there. I rarely do day trading. I play along with my friends, but overall my portfolio, 90% of the funds are going toward long-term investing. Only like 10% I'll put like $1,000, like less than 10% to play around with it. Even if I lose it, it's the house's money because I made it back already during my swing trading, or I basically don't touch my long-term. So as you can see, Goose, GOOS, Canada Goose, it's one of the high brand names out there for extreme weather type of clothing. So let me just show you what it is for those of you who don't know. So basically this is a website of Canada Goose and they sell their own merchandise on their own website. I think you can find it on Amazon, but they sell mainly through their channel. And the price range of these type of clothing, it's ranges from 600 to all the way up to 12, 13, maybe $1,400. So it is a luxury type of brand, and it has global exposure. I believe they sell these jackets, percuts, in China, in Europe. So it's global brand, and also in obviously like New York and in the US. So as you can see that I have 1,000 shares in there, and that equates to roughly 61% of this portfolio. I want to buy more around the $22, $23 area, but I just didn't have the chance to do it. So this definitely is one of the long-term play. I think that they got abundant of cash in their balance sheet. I think that if any of these type of retail, I don't know if I want to call it a retail name, basically if any of them are going to survive, this will be the name to survive. And if you follow them during this whole pandemic environment, you won't see any type of sale like discount in any of their products, at least not to my knowledge. They have never put any of their product in sales yet. So as you can see, even despite the pandemic, the management, it's focused on brand, the reputation. Basically, they don't want something that everyone, I don't want to say in a bad way, but they don't want their brand to be everywhere. They want it to be something like special. Only the just put it this way, they want their brand to be special. All right, they don't want you to go to Walmart and you can pick one up for X amount of dollar. It's not that kind of brand. It's a luxury brand. They want the people who own it to feel, I guess, special. You know how fashion goes. So that's how this management, I like what they're doing. Personally, if you ask me would I buy a jacket or a parka like this for $600, $1,200, I will probably say no because I'm not a fashion guy. But if you are into that kind of stuff, just like people paying thousands of dollars for shoes, it's kind of like that same concept. So it is a great brand, and it is, you can see what the management's doing, and it's been working. So I think that this story will continue to perform. So the next one I have here, let me just talk about RIG. So RIG, Transocean offshore driller, the biggest offshore drillers out there that haven't filed bankruptcy yet. And they're not doing that good, but the management is basically finding alternative ways to avoid bankruptcy, Chapter 11 bankruptcy. So they try to avoid that by basically pushing out the offering more senior notes 2027. And in the last few weeks, we have some lawsuits in terms of the management. Basically, some bondholders, they didn't like what they're doing. And basically, it's even though Transocean won, but I believe that those shareholders, bondholders, are offering a lot of basically they're diluting the overall share account. I think that's what happened. Down me on it, but I I follow it, but I don't follow it that closely. Again, this is one of the names is that in the energy space, you it's a commodity, it's based on commodity price, and you have no control over it. And the only thing that I'm based on it's what the management's doing. So I like the idea that they try to avoid bankruptcy. As you know, the second largest offshore driller, Valaris, VAL, I believe that's the name, they have filed their bankruptcy a few weeks ago. And I like how Transocean is holding up. And in the past history, I believe back in 2016 or a few years ago, there was a wave of bankruptcy going on in this industry, and yet Transocean was able to survive that. I think this will be no difference, and I have basically, I think that the management would do the right thing for the shareholder. Again, this is a very small position, not a lot in this account, but I have like 3,000 shares in the other account, and basically, yeah, that's about. If it goes below a dollar to near the 52 weeks low, around 76 cents, I might add some more contracts. I will not buy the shares just because that if I buy a contract, I can get it for 50% off than what it is. So maybe it's 76 cents. I can probably buy 2-year contract for half, like 30 cents or $30 instead of 400 shares instead of $70. So basically, I like to reduce my risk in terms of this type of company. Again, it's a very risky investment in Transocean. That's why I don't have a lot of exposure. So the next one I have in this list, it's STOR Capital. So this is one of the REITs that Buffett owns, and it's a REIT that focuses on small business. I believe 10% of their revenue comes from a large institution like the Bass Outdoor Store and like the AMC Theater. They're not doing well, but again, a very small percentage of STOR Capital's revenue comes from that part of the industry. So they focus mainly on small business solution. So basically, if you want to open your own hair salon, but you don't want to sign, or you don't want to buy a space, like like land to open up your own shop, you rent it through STOR Capital. That basically reduce your upfront costs for owning like a business in like that. So that's not, so it's a business model that offer business solution to small owners, and it cannot be overtaken by Amazon. So restaurants, hair salons, nail salons, and stuff like that. So as you can see, I have 20 call options expiring, well, January of 21st. and those are up. Yeah, it's pretty good, nicely 65, 66%, and roughly equates to $10,000 if you add the market value of the shirts. I have 250 shirts. I got this around $15, which was great timing. And again, that's when it was around that, when the market was around at the low, near the low, and at the time it was yielding around 10%. So I wish I had more capital to buy into this, but I didn't. I pretty much bought some Exxon. I made some money off of it, but it wasn't like when you compare it to store capital. Obviously, this one, in my opinion, it's much better. Again, it's one of those things that if you want to diversify, does it really make sense to buy your fifth best idea as opposed to putting money in your best idea? Like if you, it'd be crazy. Like your number one best idea of the year, and you taking money away from the number one best idea into number five. Then what does that tell you? Then number one might not be the number one best idea. So I get you got to diversify, but the thing is sometimes it's just not, like if you don't know what you're doing, obviously buy the S&P 500 and you'll be well diversified. But the thing is, if you know what you're doing, there's no really, it doesn't make any sense for you to buy the 25th best idea. Why is it 25th? Why not to buy your number one idea or number two idea? So it's just one of those things. Anyways, I wish at the time that I had bought more STOR capital as opposed to Exxon. But the next one I have in this portfolio, it's IVR, Invesco. And this name was pumped by like the investor, Robinhood investors. Well, I won't say investor because it's more like traders. So after the pump, I believe you hit the high of what, $7. So more than, or almost triple, well, a little bit more than double. So between double and triple of your money at the time. So if you look into their balance sheet, okay, so they do business. It's a REIT, first of all. They basically they have like vehicle, like agency, residential mortgage-backed security, and commercial mortgage-backed security. So basically, it's like a mortgage. You buy this mortgage, and you get paid on interest on that. It's in a simple term, that's essentially, it's kind of like that. So for those of you that are not familiar with 2008, 2009, like the mechanism behind these, the burst of the banks, if you suppose. So basically, it's when you have one mortgage, the default rate it's very high. So if you have a basket, like a pool of mortgage, if any of one of them defaults, your risk is not going to be substantial because the others mortgage type of security can pick up the slack. So this essentially, that's what they invest in. They buy a pool of vehicles through, like I said, the like Fannie Mae and stuff like that, the government-backed mortgage type of association. So they buy it on that. The rates on it's more attractive than the 10-year. So they earn more interest rate. But the thing is, if used wrongfully, basically like back in 2008 and 2009, where people are basically put a lot of junk in one basket, and basically you have no idea what this mortgage is and the default rate of, you can put 10 of the worst junk rated mortgage in one vehicle. You have high return, but the thing is, it's the risk of it being default, it's really high. So but if done correctly, this should work. And I think that the institution right now, especially the bank sector, which is pretty highly regulated, so I think it's much safer. And I think that this company, if you look into their balance sheet, they have sell a lot of assets, and they have to basically pay to cover a lot of the obligatory loans. I believe like $6.1 billion and stuff like that. So this should be the trough of the company. And right now, as of right now, we have like the Federal Reserve support this type of residential type of um, home building industry, whatever. And then, so we got the Fed back up in this space. So I think that this will be the trough for this company. And as you can see, I have 100 contracts on this name. I bought it around what, 41 cents. I averaged down a little bit. And as you can see, I do have a contract order here. What I'm trying to do here is the 6 month, well, the difference is 6 months because I own June 21 $3 call right now, and the January 22, basically the call contract, the difference, it's only 5 cents. If you pay 5 cents, well, 10 cents, I believe, I try to basically lowballing it and put 5 cents. I want to see if it goes through, because that's roughly $500 difference. If it does go through, you pay 5 cents for 6 months of time. I think that's a really good deal. Well, if it goes through. But again, it's one of those strategies that you wish you bought the longer day as opposed to shorter day. But either way, it doesn't matter because I'm planning to make this into a spread. So I will have more information I'll explain it more when that time comes. So essentially what happened is when this stock goes up, like the way I want it, I can sell a call against my original call. Maybe I will make it into a vertical spread, or maybe I will make it into a diagonal spread, depending on how this stock is acting. But overall, I believe in the coming months, when we do have basically for certain that there will be a vaccine, then this will definitely be the name that will benefit from that. So overall, this is the portfolio. And again, I want to bring this portfolio to 100K. And other than that, I will make some trading strategies out of this portfolio when I do it. And yeah, that's about it. So thank you for watching, and just let me know if you want to see the other portfolio, the updates on that one.